Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. But market's not that great of an afternoon coming in. Yes, given up those gains almost near the day's lowest point as well as of now.
Absolutely, Vinny, not a great day or afternoon coming in for markets, and likely so. You had the commentary that came in from the RBI governor at a FICCI IBA event that kind of spooked the markets a bit, especially the banking sector. Nifty Bank was down about 1% or so from the day's highest point. So let's take a look at what Nifty Bank is doing right now. It has tried to recover some of those lost to ground, but you have crucial commentary that is coming from the RBI governor. No doubt he did speak about how India is well positioned when it comes to the globe, but he did address talk about the banks and the NBFCs, and did mention the fact that their interconnectedness warrants a closer look. Also said that the NBFC should cut their dependence on the bank lending. What exactly the RBI governor actually said at that FICCI IBA event? Let's hear him out.
You know, a very interest rate increase of very high order in quick succession led to a situation where the banks and the other lending institutions came under stress. I don't blame the Fed for it. The US Fed was probably doing its job because they had to bring down inflation. High inflation is a challenge, is I think a complete no in the US economy. So Fed was completely focused on inflation. But the financial institutions and the banks, perhaps they had not adequately factored for the change in the cycle, for the cycle to turn down. That is, perhaps there was a belief that this low for long interest rates remaining low for long will continue to remain long, and perhaps will continue to remain so till eternity. Now that's a fundamentally wrong assumption. So far as India is concerned, we did not see the kind of financial stress or the banking stress because our regulatory requirements ensure that the banks themselves had taken the required steps, and they were ready for a change in cycle and for a regime where interest rates are tightened and interest rates are increased by the central bank. Also, what helped was that our calibrated approach in increasing the interest rates.
Okay. That was the RBI Governor, Shaktikanta Das. But let's move on and get started with all the stocks that are buzzing in trade, either on the back of news flows or technicals. On the technicals, we do have Sumeet Mulchhandani joining with us right now, while from the research team, we have Ansh as well as Ankita joining in with us. A very good afternoon to all three of y'all as well. And for the first stock that is in focus today, let's talk about IGL. This one is in focus on the back of a brokerage note that we have from Morgan Stanley, where Morgan Stanley is maintaining an underweight rating on IGL. They've given a target price of 432 rupees per share. What they're saying is the LNG trucking is seeing its ecosystem slowly develop from the nascent stage. IGL's tie-up with the logistic operator should help them improve the ecosystem, and LNG trucking does provide a new demand growth area which is not priced in by the market as of now. Other than that, obviously fuel retailers like HPCL, BPCL, IOCL also could be some of the beneficiaries of this LNG trucking as well. But on the back of this, we're keeping an eye out on IGL today. Yes, maintaining an underweight rating, target price of 432 rupees per share. IGL trading with gains of 0.5%.
All right, that's IGL for you. Next up, let's talk about IDBI Bank, and that particular counter is under pressure since the word go, and not just the commentary coming from the RBI governor. In fact, IDBI Bank has been under pressure since the market opened. In fact, it fell as much as 4.5% at one point in time as well. The government actually has cancelled bidding process to hire an asset valuer for the share sale in IDBI Bank. Remember, the government has said that they will invite for fresh bids in order to select a valuer for the stake sale, for its stake basically in IDBI Bank, and which means the most likely the stake sale may not happen actually this year or this fiscal year. And in fact, my colleague Prakash is here to tell us exactly why did the government drop the bid process to select the valuer for IDBI Bank asset sale. Prakash, over to you. What more details are you picking up with this regard?
Yes, an important development coming in on IDBI Bank disinvestment front, as the government has decided to cancel the bid process for the appointment of an asset valuer for the strategic disinvestment of IDBI Bank. A very significant development coming in as the government has decided to cancel the RFP process primarily due to low bidder interest. Deepam has said that the government has received just a single bid for asset valuer. Therefore, competent authority has decided to cancel the RFP. The whole process would be examined. Existing criteria would be reviewed based on feedback, and government will issue a fresh RFP for the appointment of an asset valuer going forward. So it's a very significant development coming in. That also means that the whole process is going to be delayed. As you are aware that as part of IDBI Bank disinvestment process, Deepam had invited bids for the appointment of an asset valuer, and the last date for submission of bid was October 13. But it has not received much interest from asset valuer, and therefore it has been decided to cancel the RFP process. However, Deepam secretary has already said that yes, it's the fact that the process for IDBI Bank disinvestment is on, but the transaction would not be completed during current financial year.
Okay, thank you so much for that, Prakash. So yes, IDBI disinvestment is unlikely in FY24. But Sumit, you have picked up IDBI Bank as well. So what is your view in terms of the technicals and charts? How is IDBI looking?
Hi, good afternoon to all. So yes, the news is little bit negative, and already the negativeness was shown in the charts also. The stock has broken its 100 moving day average 3 days back, and it was a gap down also. 59.50 is the most important level and most important support, because if it is breaking, then it is a formation of inward head and shoulders. So we are expecting a downside momentum if this level is not sustaining and giving the close below. So below the levels of 59, we are expecting the levels of 56 and 51. That is around 15 to 20% downside. So better to keep a strict stop loss of 59 on the closing basis.
All right, moving on then, Ankita, let's put the spotlight on tech major TCS. Why is this particular counter in focus today?
That's correct. TCS is in focus today. It is because TCS has said that, it will make a provision of $125 million as an exceptional item in its third quarter results in relation to a trade secret lawsuit which was filed by the US-based Epic Systems. Now remember, the trade secret lawsuit was filed by the Epic System against TCS and Tata America International Corp. The company had alleged that Tata Group companies of stealing of intellectual property rights, to develop its own, even though that, it was contracted to implement Epic's healthcare software. And, the US Supreme Court had also on November 20th rejected TCS's appeal against a verdict passed by the District Court of Wisconsin, upholding the order that includes the $140 million in punitive damages. But the company yesterday said that, they will be creating a provision of $125 million for the same. And on the back of that, TCS is going to be in focus today.
Okay, so surely keeping an eye out on TCS, but yesterday there was a news break of ET now that was confirmed as well, and that was in terms of, obviously, what we had was that Union Government has written to the state chief secretaries to get all the vehicles on road insurance. Over 54% of vehicles on road are uninsured today. But yes, that news break was confirmed, and we had seen New India Assurance surely buzzing in trade yesterday as well. Today also it's holding on to gains, and Sumit, you have picked out New India Assurance on the charts as well for us. Very strong and growth that we've seen in the last couple of days, last 6 months also a very strong growth story that we've seen on the charts. Is that something that is sustainable going forward?
Yeah, there are the multiple parameters as per the technicals also which we are seeing for the breakout. First of all, again and again, 3 to 4 times it has taken the support of the 100 moving average and bouncing from these supports. Weekly trend line breakout, horizontal breakout of 135 levels, and now the most important is the last resistance of 174, 175 also it is crossing on the closing basis. So we are expecting a higher momentum to be continued, and we are expecting the targets of 197 and 230 levels from here. So one can keep a trailing stop loss of 154 also.
All right, moving on, Ansh, let's talk about a stock that has made sure not only that one is buzzing, but the entire Murugappa group stocks are buzzing, and that is CG Power. What is the news flow surrounding this one?
Right, so the stock has actually touched its upper circuit of 20% in trade today. Company has applied to the Indian government's Ministry of Electronics and IT for setting up a facility focused on outsourced semiconductor assembly and a test. They're gearing up to invest nearly $791 million in this project for over next 5 years. This investment will cover everything from setting up the facility to making it technologically advanced. If approved, this move could mark the company a significant player in the semiconductor and tech assembly landscape. Also, CG Power, Shanti Gas, Tube Investment and Carborundum are all part of the Murugappa group, so even they are expected to benefit from this diversification move. Also, if you see the chart of CG Power, stock has given a breakout from horizontal resistance trend line and it has also touched the record high level today. So for those reasons, the stock is in focus today.
Absolutely, keeping an eye out on CG Power and all the group companies have Murugappa group companies also, which have been buzzing in trade as well. But on that note, let's slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
Welcome back. You're watching Market Fatafat right here on ET Now. Let's continue to talk about the stocks that are buzzing in trade and also on the radar of our experts. And Sumeet, coming to you, Morpen Labs. How is this one looking on the charts to you? Yes, spectacular returns over the last 6 months, 62%. But do you think there's more scope of upside for this counter now?
Today on the daily basis, it has given a breakout of the cup and handle. But we are just waiting for the levels of 42 to cross and sustain on the weekly time frame. If that is a inverted head and shoulders breakout also. So if anybody is holding or anybody wants to add a new, can utilize the dips and can add at the current market price also. So we are expecting a upside till the levels of 55. So one can utilize dips till the levels of 40 and keep a stop loss of 37.50 here.
Okay, keep an eye out on those levels. Expected to go around to these levels of 55 more. Labs. That's the view coming in from Sumit. But let's move on and talk about Polycab and KEI. Both these stocks are in focus today. We have a note that has come in from Goldman Sachs where they are initiating coverage on Polycab as well. Whereas KEI, Polycab is initiating coverage at the buy rating target price of 5,750 rupees per share. They're also initiating coverage on KEI with a buy rating as well. 2,730 rupees per share is the target price they've given. They believe that they are in the prime position to benefit, especially aided by the nation's infrastructure push that we've been seeing, as well as in the near to medium term. It has enough legs to grow up to 2 times the GDP that we're seeing as well. They see incremental growth stemming from other sunrise industries such as the electric vehicle space as well, and they prefer Polycab over KEI due to the broader distribution that Polycab has in terms of the network and the faster growth prospects as well. But yes, both the stocks initiating coverage with a buy rating over there. As of now, given the market scenario as well, nothing exciting happening here. KEI is down 4%, Polycab is down 0.23%, opened up in the green but trading at the least as of now.
All right, moving on. Sumit, let's talk about Varak Engineering and how is this auto ancillary stock looking to you on the charts? Do you think that given the fact that we are seeing a push in the way how the auto segments are diversifying, Varak Engineering stands out?
The stock has given the breakout of the flag and pole formation. So 3 days before, it has given a good upside momentum. In a single day, it was gained about 17%. And today we are getting the follow-up also. If you check on the weekly time frame, the stock has broken its level of 2019. So the 520 level, 500. So one can keep a stop loss of below the 520 level, and we are expecting in next 3 to 6 months the levels can be 650 and 750 also. So just hold the stock and ride the momentum.
All right, moving on, let's talk about U Capital, and that particular counter is in focus. They gave a commentary on the RBI circular that came in last week where they're saying they do not expect any material impact on the cost of borrowing and impact of the increased risk weight on the capital adequacy ratio, return on equity and return on asset would be nil. They're also saying that they don't expect any impact on the increased risk weights of the bank lending to NBFC either on their growth trajectory or profitability, either on the immediate basis or in the foreseeable future. So on back of that positive commentary coming in from Yugo Capital, we also spoke to the management. They were positive while speaking to us as well. The stock, you can see, it's still holding on to strong gains, about 3.6%.
Okay, let's move on to the next one, and this has been shining bright. Yesterday at least it crossed that market cap of 3 lakh crores. In the morning also it was trading with a positive bias, trading at the all-time high levels, and that is Titan. Sumit, at these current levels also, you think it's an attractive time to enter Titan now? Last 6 months, 25% return is what it's already given. What's the view on Titan?
First of all, we would just advise that this is the stock which can be added in the portfolio in every dip. And as per the technicals, if we see 3 times we got the rejection from the area of 33.30. But yesterday it was a good gap up and closing was important. So today we are getting the follow up also. So for a small swing trade, one can add with the stop loss of 3350 and target can be 3580. But it is just as I first advice, this is the stock to add in the portfolio. So we are also personally, I am also holding this stock in my portfolio.
All right, that's Titan for you, which Sumit believes is a portfolio stock, a stock that you can look to buy at every dip. But Ankita, let's talk about Tata Motors, then another Tata Group company. And why is this one in the spotlight?
Well, yes, Tata Motors is in focus today because the company has announced that they have commenced the sales of its commercial vehicles in Thailand. Now, the company had said that, it introduced a lineup of trucks, including the Super Ace, Ultra T9, Ultra T14, and the flagship Prima 5038S. With a gamut of value-added services, in the country. Now, remember, in the month of April this year, Tata Motors had announced a strategic partnership with Inchcape Inc. as a distributor of the commercial vehicles in Thailand. And, now they have come out and announced that the commercial vehicle sales will commence in Thailand as of today. And on the back of that, the stock will be in focus today. But as of now, we are seeing a bit of a fall in the trade. It's down 0.5%. But on this news flow, the stock is going to be in focus today.
Okay, let's move on to stock number 12 for today. On the charts, we're going to talk about Bharat Electronics. Sumit, this one, how is it looking like on the charts? Last week, today itself, also a bit of a subdued move that has been coming in for BL now. We've seen a run-up before that, but is this a turnaround story, or, do we expect it to start seeing a decline, or maybe, again, it's going to be coming back and up move is expected here?
Yeah, prevention is better than cure. So here the cure is stop loss. And if we see the technicals, it has formed a clear DCC pattern, which is a dark cloud cover. And today's closing is important. So 140 is the stop loss. On the closing basis, if it is closing below, then we are expecting a 5 to 10% downside from here. So next target, if any short clear is there, so we can expect a 127 level. But if any retailer is there, we will just advise to book profit and exit for a lower time frame.
All right, moving on, Ansh, let's talk about Sanofi, and why is this one in news today?
So the stock is up around 1.7% in trade right now. B&K Security has released a brokerage note on Sanofi, maintaining a buy recommendation with a target price of 8,950 rupees. Currently, the price is around 7,900, so the target price is still around 12-13% away from here. There are many positive factors for stock to run up as per the report, like Sanofi plans to demerger its consumer health business in a 1-to-1 ratio. This move is seen as a strategy to allow each entity to focus more effectively on its core operations. Also, despite facing a 21% price cut in Lantus, that is insulin, there is optimism about the price revival, and it is the key product of Sanofi in the diabetes segment. Lastly, B&K Security sees a significant ramp up in new launches in 2024. This includes introduction of Soliqua in the diabetes segment and other launches in the cardio segment. Also, if you see the chart, stock has been advancing for 7th consecutive month now, and it has also touched a 2-year high today. So for all those factors, stock is in focus today.
Keeping an eye out on Sonop, India trading with gains of 2%. But moving on to a story that is in Power Ministry is reviewing 80 gigawatt thermal capacity addition by 2031 and 2032, and also asked the industry to invest in thermal power projects as well. Prakash is joining in with us on the phone line to give us more details on that. Prakash?
It's an important development coming in as government has held meeting with industry to review 80 gigawatt thermal power capacity addition by the year 2031-32. So a very significant development, especially in the context of India's growing power demand, which is around 20% higher than the last year and expected to grow further in accordance with the growing economy. Power Minister has asked the industry that thermal energy cannot be written off till storage becomes cost effective for around the clock renewable energy supply. In addition to that, Power Minister has also asked industry to step up and invest in thermal power projects going forward. Moving ahead, the government is trying to give assurance to the industry that they'll keep getting a steady line of orders, for next 5 to 7 years. Instructions have also been given to the states to ensure full availability of their thermal capacity. That means more generation capacity will be added, and so as equipment manufacturing capacity. So this meeting was also significant in a nature that and equipment manufacturers are also invited in this meeting. However, companies such as GE and L&T has urged government to review a current bidding process of the projects. All in all, it's a very significant development, rather a bold step that the government has taken by deciding for the addition of thermal power capacity in order to meet India's growing power demand. Back to you.
All right, thank you so much for that, Prakash, for getting us those crucial details of the fact that the Power Ministry held the meeting and the fact that the Power Minister has asked the industry to invest in thermal power projects, and also the fact that they're saying that thermal energy cannot be written off till the storage becomes cost effective for renewable energy. Thank you so much for getting us those details, and we will touch base as and when we get more updates. But on that note, we slip into a break on this edition of Market Fatafat. When we come back, we'll talk about more stocks on the other side, so don't go anywhere.